is this policy divergence rate differential issue was going to punish these currencies of central banks that are not moving fast enough.
Yeah, mainly for us, we playing on some currency play. For example, like the shorting euro and shorting the yen, mainly because of the divergency and also the technical momentum trading. But also, actually, we did some short in AUD as well because recently there are some recession risk or recession play on the book. For example, like the oil price as well. So we'll treat them as like strong dollar play as well. So there are two different kind of similar catalysts on strong dollar and the recession play.
Andy, so let's talk a little bit about King Dollar. This is the question of the day from MLive today. Which assets are at risk from King Dollar? Of course, we have seen the MSCI Asia Pacific ex-Japan already lose about 20% this year already. What are you watching?
To be honest, right now we are quite cautious on the in Asia side because of the strong dollar and also for the bond default risk. Seems like right now the market is not pricing in too much on the default risk at this moment. As if we look at those high yield bond, unless you are playing on those Chinese high yield or the Asian high yield, we don't really believe the high yield exposures are pricing in those part. But for example, like in the last few 2 to 3 weeks, actually we have been underweighting the Chinese exposures. We have which we had overweighting in early May and taking profit in the late June and start underweighting in last 1 to 2 weeks because of the sentiment and also the negative news about the property market in mainland China. So at this moment, what we are thinking is if we believe that there's some rebound in Asian sentiments, maybe we believe that taking exposures in AUD instead of directly taking exposures in mainland Chinese asset may be a better choice.
How much conviction is there when it comes to Chinese equities at the moment? Because we see these swings in sentiment, and it doesn't feel like any rebound really has a lot of conviction behind it.
To be honest, right now, especially in Q3, actually we are playing a bit cautious due to there's a loss of uncertainty. For example, like the COVID policies, where there is any opening in Chinese market, and also if we look at some event-driven, maybe we will need to wait until the 20th National Congress. So that's why at this moment we are thinking maybe in the Q4, maybe a better time to get back to the Chinese equity market. This is something similar to what we played earlier this year for the Hong Kong equities. During that time, we were talking about the events, about the new government, whether they are going to have a new players, and then we were thinking the market doesn't really care who will be in charge, but the market needs certainty. So that's why we are playing the similar game for the Hong Kong equities market and into the Chinese A market or the Chinese related market. What we are thinking is maybe after Q4, after the Congress, there may be some unexpected positive policies coming up. I mean, not only about whether they are supporting the EV market, supporting the consumer, maybe there's something like reopening as well.
Fundamentally, though, if we don't see policy support and confidence being restored to the property market with this mortgage payment story, how much damage does that do, given we know so much of household wealth is tied up in property?
To be honest, what we're thinking is right now you're still in the progress of property deleveraging. So we don't see any short-term support or any a big turnaround in the sentiment at this moment. Even though maybe there are some news saying that they are going to like soft landing on some policies or some kind of event happening right now. But we believe that for the consumer sentiment, just take time to really build up again. So at this moment, maybe we would expect there are some collateral damage due to the deleveraging. Hopefully those, the collateral damage won't cause any big issue like any black swan. But for at this moment, we could see like for example, like the Chinese high yield asset as an indicator until they really bottom or even bottom out. We were saying that better to not investing into property-related asset at this moment unless you are just short-term traders.